All right, everybody, this is Trendy John from Simpler Trading. Let's go ahead and get started with our broad market analysis. We're going to get started on this week's major U.S. economic reports and Fed speakers. We'll be covering dates of August the 4th into the 9th. So, again, futures do open tonight Central Time. You're looking at 5 o'clock or 6 o'clock there on Eastern Time. And of course, for you guys over in California and so forth, man, it gets started pretty early for you. Well, today we're going to start just like we always do and remind everybody that any kind of event that we have here on Econ reports and so forth are just a catalyst to push price into supply and demand. Now, last week we came off of what I thought was a pretty big surprise on the reaction to the downside, although, as a disclaimer, I have reminded you every time I've done the broad market analysis that things felt extended, and at some point, demand zones would stop working and that price would come back into imbalances in the market. And we'll be going over that just a little bit later, but it is a very important reminder to allow you to understand that markets just don't always go up. Now, for me, I love dip buying. Not everybody does, but I like accumulating and I see opportunity. It's really hard to convince me otherwise that the market is not opportune time now to start adding into positions. Now, I think a lot of people will hear that and they immediately think about that day. So perhaps I say something like this, and then you go back and you're like, holy cow. The ES futures pull back 100 points or the Nasdaq futures pull back 600 points and things just seem really dismal. Well, for me, I look at it as an opportunity to scale into trades. It's just one of my favorite things to do. And then when the market decides to find a little bit of demand and we start to push up, that's where I like to trim out of my positions for profits. Now, this past week, there were some difficult times, meaning I had a couple trades that I felt like were going to do well, but the dip just kept dipping. And overall, I do believe that we will find a little bit of love here shortly, and we'll go over those charts here just shortly from here. So, Monday, so I'll tell you right away, there's not a whole lot going on when I look at this. When we come in on Monday, we have PMI, ISM services, probably cause a little bit of volatility in here. Tuesday, US trade deficit. Wednesday, consumer credit. And Thursday, initial jobless claims, wholesale inventories, and then we have a Fed head speaking. Now, let's just go ahead and move on to the next week since that there's not much going on there. On Monday, August 12th, we had the monthly US federal budget. And then on Tuesday, we have optimism index, core PPI, and then on Wednesday, Consumer Price Index, CPI. So this is where it starts to sound a little bit more interesting to me. And then on Thursday, initial jobless claims, Empire State Manufacturing Survey, U.S. retail sales, Import Price Index, industrial production, capacity utilization, business inventories. And on Friday, consumer sentiment, housing starts, building permits, and so forth. So the majority of econ data is coming in next week. And so right away, I feel as if because of the big pullback that we had last week, we're going to see a lot of chop, a lot of digestion. Just like when the market's going up, the market needs to cool down. And just like when the market's moving down in such a fast fashion, things tend to get really choppy and digest. Now, I'll tell you that during these type of moments, it's when most traders have a hard time because they're speculating. Just take it from me and my opinion, what you want to do is expect the volatility, still trade your setups, and just understand to give those trades that you're going to take a little bit more room to work out. So I tend to go smaller allocation, wider stops. That's just how I do it. And that's always, that helps me to stay in that volatility, if you will. The next thing that we're going to have on our list today is going to be earnings whispers. So we're going to come over here and take a look at that. I'm going to pull this down. And you guys can see, I mean, for me, I'm not going to lie. I feel like this week is a lot more exciting than last week. There's a lot of names on here. So PLTR, this is a name that I'm building. for a long-term position. I understand that they do have earnings, but overall, my allocation really is all that matters. I'm comfortable with what I bought so far. So again, several hundred shares here to get started with. I'll probably protect this position with some sort of put debits. I'll look for some demand below and target that. And if it doesn't hit, that's okay too. I'll just end up buying some more shares if we do get that drop. Then next, I am interested in HIMS. They had some sort of catalyst this past week. They continue to fall, and I'll be looking at levels going into their earnings after close on Monday. And then Lucid, of course, I want to see what's going on there, and maybe they have some sort of impact on Tesla. Tuesday, we have Uber, SMCI, Celsius. I'll tell you what, Celsius, this might be a huge disappointment because it was one of my favorite stocks coming into 2024 and we nailed it. I mean, seriously, every time it came down to a certain level, we added. This thing got close to, well, it did get to our 2024 projection. And just like that, ever since it hit that projection, it's pulled back. I want to say Celsius is down more than 50% from its highs, which was only about 2 months ago, maybe just a tad bit more. Then we have Rivian, definitely interested here in the EV space. I want to see how they're doing. And again, could have some sort of impact on Tesla, and I am a long-term Tesla shareholder. Looking over here, Airbnb, definitely want to know what's going on there. A little bit of casino action with Wynn. Caterpillar, feel like they've had some nice pullbacks as well. There's just so many good names. Uh, Devon Energy, Reddit, I want to see how they're doing after their API or their initial IPO. And then over here on Wednesday, a lot of good names that have not really been performing all that well, like Shop and Disney. Will this be the week? We'll see. Robinhood, also Apps, HubSpot, Oxy, Lyft. I love this lineup. And then LLY, I have a speculation trade to the upside. We'll see if it works out. And then moving on, Datadog, and then over here, TTD, the trade desk, and then moving on down. That pretty much sums up what I'm interested in going into this coming week. Okay. And again, these are just catalysts that are going to push price into supply and demand. We love to find those supply and demand zones before they have earnings. And then what I like to do is buy debit spreads. One of my favorite things to do. Matter of fact, we did it this past week, and on Amazon itself during their report, I was able to capitalize. Um, I think we ended up spending like $1 something for a spread, and we ended up selling that for about 420 or so. So it was a really nice move, and it paid for both sides of the trade. It's one of my favorite setups going into earnings, and I actually have several videos on my YouTube page that help you understand how I do that. If you're already a supply and demand trader, basically we're finding supply and demand. We're buying debit spreads around those areas into earnings. Okay. Next thing that I'm going to be looking at, we're going to go ahead and move down here and get to the bigger picture. So what I mean by the bigger picture, we'll be looking at the quarterly candles. So each candle represents one quarter. All right. And that means for right now on these next two charts, the SPY and the QQQ, we have 1 month and 26 days to go. So in saying that, understand that a lot of things can happen during this time. But as of right now, we're speaking from a weekly perspective, and I'm just giving you heads up what the major levels are and what you could see. Now, I promise you, I have went over this almost every single time I've done the BMA, and that is to remind you about the imbalances in the market. Yes, we've had an amazing run, and really at the end of the day, this is just a digestion period that I see. It's actually very healthy, and it's pulled back this past week right into the 23.6, which was our first level, 528.27, which was going to be our support. And again, I can't make this up. If you look, that was the bottom there for this past week. We did get a little bit of relief bounce, but it's very, very small. Now, what do I mean by imbalance? Remember, these 9 EMAs, they tend to be magnets. When the market wants to pull back, that's typically where they're going. It can get really ugly. It is a dramatic pullback if we were to see this, let's say even this quarter. I would expect if we were to hit the 9 EMA for any reason, that's going to be a really big flush low, and I think we get a really big pop from there if it happens, okay? Now, with that 9 EMA, there's also a lot of confluence. Right here at this demand level, we had a trendy buy signal identifying that structure. And this is where I look for big money to come in and for retail traders to basically get pushed out of the market. Let me go ahead and read this. Some of it may sound like what I just said, but I just want to make sure we read it. Last week was wild indeed. If you read up here, you'll see that. I believe most participants were caught off guard by the aggressive selling. Of course, there were a lot of traders out there who did really well, who tend to, the whole entire year look for a sell off. And I hope this was that week for you that you did really, really well. So, hats off to any traders out there on the put side and the bear side. It's about time that you guys get something in return after so many months straight up. Notice that selling led price to the first support level on the court chart, or sorry, on the court chart, on the quarterly chart, and resulted in a bounce. 528 will be this week's over under, and that again, that's at 23.6. This quarter is an inside quarter, but we have 1 month and 27 days until the close, and in my opinion, this is healthy pullback so far. If this over under doesn't hold, look for prices to continue down towards 522 and possibly all the way down here at 505. And again, using trendy methodology, this is okay. It is bullish as long as it can stay in this level. Let's go ahead and move on to the cues. And just like the SPY, it's a little bit more dramatic, meaning, you look at the size of the candle, and when you compare it to last quarterly, it's pulled back a lot more. Matter of fact, you'll notice that after we hit our extension target to the tick, by the way, and then we pulled back, and we expected this from our 2024 projection, price came down. It flushed the 23.6 so far, and honestly has come very, very close to the 38.2, which is at 441.68. Just like I spoke on the SPY and I have reminded you several times this year, it is possible if price wants to drop, there would be a lot of confluence here. We have a trendy edge there, we have the 9 EMA cloud, and we have this demand zone that's sitting right there. So this is possible, and if that were to happen, you could see prices come all the way down to 400. And when you look at price, that's quite a bit. It's 48 points. But after last week, it seems like anything could happen. Let's go ahead and read this. Last week was aggressive to the downside, and price nearly dipped back to the 38.2 of 441.68. This will be the over under this week. As I have stated all year, the 9 EMA on the quarter is possible, and I've tried to remind everyone every single broad market analysis, which is what you're listening to right now. Now that I'm thinking about it, if you could just take a few minutes to give me a like on these charts. They have worked perfectly. It doesn't mean that you worked perfectly or even me. Sometimes charts, they're a great reminder of how well you analyze, but not always the best of how you executed. That's okay. Trading is going to be difficult. Also, reminder, things could continue towards the 9 EMA, and I just want to make sure you understand that. Again, this over under down here at 441.68 going into this week. Now, the next thing that I want to show you is the dollar. This was pretty interesting. We had some levels that we've been going over and over and over, and I'm going to show you here on the daily. Now, what's interesting is we came up right into the level of resistance, okay? And this happened this week. I was indeed correct. We hit that level, we pulled down, but as price dropped below one of the levels that I thought would create bullishness, and we don't know yet, it still could. 103.7 on Friday. It broke below this level. And matter of fact, you can see here it was at 103.22. And because of that, I'm curious of what kind of reaction we're going to get on tonight's open. I'm really curious about that, and I hope you are too. Typically, when the dollar's pulling back, the market's pushing up. That was not the case on Friday. So things look a little bit different. And if you ask me, it's just a hard reset. The market is resetting, getting us ready for the pump into the end of the year and towards election. This is an opportunity, but please note that timing is the variable. Although this may not have been the best time to scale in, say on Friday, but you never know, a couple weeks from now, a couple months from now, things could turn in your favor. What I'm doing is identifying levels where I want to scale into long term positions that I like. Let's go ahead and look at the TNX. I was predicting sideways to down, and holy crap, did we get it down. I'm going to be honest with you. I wasn't expecting this kind of move, but now that I'm looking at it, it does make sense. We came up and hit my inside and down formation, which was supply, and this was last week, and it worked perfectly. We expected a little bit of downside. I thought price would probably just kind of hang out here in the four levels, but the TNX actually came back to the original inside and up formation. Okay, so we are here where we could see the TNX bounce or the 10-year treasury. Just note that it looks like it's coming in about 25% of that inside and up formation, and if it needs to, could come all the way down towards 3.6. And if we go back several weeks, I might have been last week, I said that I was looking for us to come all the way back into the threes before the end of the year. I just didn't think it was going to happen last week. Okay. Let's go ahead and come over here to the skew. This is really, really important. I really thought I was going to get an opportunity to lay really heavy into puts going into this week. I had this plan and I've had this plan all year. Every time we came in here, we buy calls. All right. You should be buying calls about 5 to 10 days out, and things would work really well. What was interesting is when I opened this chart today, I honestly expected to see 2 weeks down. But that wasn't the case. The skew actually went back up, telling me that hedge funds actually think that there could be, it's a little oversold, if you will. All right. And maybe that the fear should come down a little bit. But it's interesting too. I don't usually like to throw catalysts into my overall broad market analysis, but there's been a lot of talk about Warren Buffett and how he sold like a ton of his shares. Now, me personally, I think that the gentleman probably just taking some money out and taking care of his family. It probably has nothing to do with Apple. I mean, he's getting to an age where he's got to think about his family, think about trust, wills, things like that. And to me, that's small change what he's doing, but it will have an impact on Apple, and therefore we could see that can impact the market this week. I know that back in the day, one of my biggest trades was actually being in Apple from a technical perspective, and Warren Buffett saying that he was like doubling down on his position. This was almost like 8 years ago or so. Again, they're going to use catalyst to expedite, if you will, to increase the fear when they know that retail traders are fearful. You start getting all this bad news, things don't look great. You kind of get into a dark hole. Trading becomes kind of over trading for a lot of traders. There's a lot of bad things that can happen when fear creeps into the market. Just check yourself. At the end of the day, all I care about is how much I have in my basket, if you will. And right now in my grocery basket, I am adding into trades. Most of my options can be anywhere from 60 to 300 days, and then I'm building into shares. I understand I could be wrong, guys, and I understand that the extreme fear comes when we see this. And honestly, I'm really shocked we haven't closed 2 weeks underneath this level this year. I'm really shocked. And I thought it was going to happen in the second quarter, but it looks like maybe, depending on how this week shakes out, we could see that in the third quarter. All right. So just keep your mind open. Understand that when I'm looking at this, I'm looking at the dollar, I'm looking at the SPY, I'm looking at the Qs. There's several things that tell me we could see a bounce, but I think I said this last week. The bounce could be short lived. And a matter of fact, it is a relief bounce until proven otherwise. If you don't know anything about a relief bounce, I have a video on YouTube. It can help you and save you when the market's going down and keep you from getting into a bad position. Okay. That is the skew. Again, it's at 139. Um, Telling me, at least from what I see, is that they think it could be a little like oversold to the downside. Okay. All right. So the next thing that I want to look at is moving on down here to the fear and greed index. This is where this kind of kicks in. Check it out. Fear, right? There's a lot of fear here. Typically, what happens is if we push up towards the fear or down towards the fear and extreme fear, is that the majority of participants in the market, including yourself and most retail traders, even hedge funds, are getting heavy on the put side. You could go over and look at the put call ratio, but for me, I just look at this and understand that. And when people start to get really heavy on the put side, they will pull the rug, if you will, um, yeah, just like on the call side. So you could expect maybe some bottoming action. I'm not saying that we're going to bounce on tonight's open, but if for some reason we gap down, there are a lot of levels that are really important that we should be taking a look at coming into this week. That leads me to the futures. Let's go over to the ES futures and let's check that out. So we are going to start here on a weekly, just like we always do. I'm going to go over a lot of notes with you, not a lot, but just some that may help you or they should help you. My overall sentiment last week is I was bullish with more caution though than the previous week, if that makes any sense. It means, hey, things were coming back to the 9 EMA, and you could see that on the second week. And I really love the idea that it had held that level. And it also looked like they did a flush low. And you know, you cannot hide the fact that things just really lined up to be perfect. It hit the 38.2, it bounced like it was supposed to. It closed above here. We had 2 weeks down here, 3 weeks down in the NASDAQ. It just made sense that we would see a bounce. Well, folks, we did get a bounce. All right. Don't forget about how to read your candles. That means that price came all the way up to here, and we had an amazing time. Matter of fact, just like many bulls and like myself, I was pumped. It was like, hey guys, I told you we were coming into these levels and we did really well. And then we bought the dip and I was on cloud nine. I had bought Nvidia. I increased my size in Nvidia at $2, I think, or $3 and some change. Options went all the way to 7. We did some trimming and then I held on. And again, I was on cloud nine. Everything worked out. And then the next day, sure, we had hit a level on the ES futures. I said specifically the same level I gave you. I said, look for this to be a rejection. Did I think that we would get 100 plus points? Hell no. And I'm just being really honest with you. And I don't think a lot of people did. All right. Once things started to really break down, sure, I'm sure there was a lot of callers of that. But from the beginning, it just wasn't something I was expecting. But then when I look back and I think about all the different times that I was telling you guys that we could be looking for a reversion back to the imbalances in the market, then I, shrug my shoulders and go, yep, well, it happened. You just weren't prepared for that kind of move down. Now, we did have some great trades to the downside, not only at Simpler, but also even on Friday, we did well on SPX puts and so forth. Okay. And sorry, SPY puts. All right. Now, what else has happened here? These are very important levels. This week, I'm neutral, meaning I expect chop to down until I see prices get above the bear channel. Now, I want to make sure that that sentence that don't misinterpret it. Doesn't mean that I won't go long, but it means if I go long, there are very important levels that you have to understand. We have to get above the bear channel. That's the 23 and the 38.2% of the drop. Okay. Now, the way I get that is not the fibs that you're seeing on here. I draw all the fibs from here to here, and I'm looking for a move up here. All right. So just know that. These fibs that you're seeing are the overall trend here. And you'll notice that we kind of stalled here at the 50. And on Trendy Fibonacci, we expect chop between the 50 and 618. Now let's go ahead and get started. The bear channel right now is that 54.24 and 54.82. If price can get above those, things look better. Price did flush the 9 EMA last week on the weekly. It also took out the previous low. We talked about that last week. It took out the first demand low uh, level, went through it like butter, it seems like, and stalled Friday at the next level right here at this green box. So these green boxes have been here for you for a very long time. This level is pretty deep. What I mean by, if you look down here, it's all the way down at 5,200, and you have a 61.8 at 5,275, which is your golden Fibonacci. These are major levels coming into this week. The origin of this rally started in April. That origin, what I do is start right here with this candle, and I end up here at that candle. Okay. If you measure from April to the highs, you will see that prices between the 50 and 618. I just went over that. And if price closes under the 618, that means the April trend rally, this entire thing right here, has now been broken. Okay. So you need to know where that level is. It's around 52.75. I would put that on there just so that you understand that things aren't looking so hot. All right. The ES also completed 3 weeks down. And just like last week, I said, hey guys, NASDAQ went down 3 weeks. I'm expecting a bounce. We did get the bounce, and we'll show you that here in a minute. But again, sold off just like the ES futures. Let's go ahead and move on to our daily. This is where we look at, and believe me, they worked very well last week. If you go back and look at those charts, they worked really well, and now I've changed them up. So please put these on. You can pause the video, but this is your short trigger. This is your resistance level. This is your buy triggers. And each one of these, it doesn't mean that we just buy blindly or that we, short blindly. We look for a couple things on smaller time frames like trendy turn signals, part of our indicator package, things like that that are going to help you take that trade with confidence. Okay. Let's go ahead and move on. Now we're going to be looking at a 4-hour chart. And that 4-hour chart, I had to put the 4-hour on like 180 days to find these levels, and down below 53.70 by 52.04, which is pretty confluent with what I was showing you on the. I mean, we could take this 52.04 and move it down to 5200 since that was the bottom of the weekly, but this is what I'm seeing on a 4-hour. So please take note of that. Notice up here, the 4-hour is pretty far away. Now, it would be nice to get a catalyst in the market, like get a flush low, and then we get some really banging information that pushes us all the way up here. Now, when I look at these candles all through here, we do not have a 4-hour inside and down. The 4-hour inside and down is here. We have inside and ups here. So right now, this could be our range, but with the lack of catalyst that I'm seeing in the market, I would be pretty shocked to see price go all the way back up there. So we have to look at just normal stuff. Like, for example, just take some fibs from here. Let's go ahead and hypothetically say we get into 53.17. I want you to do the same thing. Look for the 23, the 38, the 50, 618, and so forth. Okay. Now you can break these down before I move on. You can break these down to smaller time frames, say like the 3-hour, the 2-hour, and look for your inside and down formations through these candle patterns to understand where you're going to see resistance. And you can also use your trendy edges. Okay. Let's go ahead and move on. The next thing we're going to be looking at is the NASDAQ. The NASDAQ, again, same thing. You're going to notice that it basically broke down. And matter of fact, now we are on 1, 2, 3, 4 weeks down. My only reservation of thinking we have a significant bounce is the lack of a flush low. But as a reminder, back in here in April, there was no flush low. Matter of fact, we bought this dip very well. It came right into the inside and up formation and never looked back. But guess what, guys? The January, or sorry, the April rally is in jeopardy right now. It's under the 618. If I come over here and I measure this, you got to notice we're under the 618. That's not a good look. All right. It's not a good look. What it means is that this trend right here is broken, and it is broken until we could get back above that 618. Okay. Now I have some major levels I want to go over and read these notes to you. My overall sentiment last week was I was bullish with caution. Well, Price took a turn for the worse and continued towards the 618 at the April rally. And as a matter of fact, we closed under it like I just showed you. I would use this 618 as an over under for this week. If we close under here, probabilities increase that we see the 88.7. We are now down 4 weeks here, and I'd say the one thing that I don't like is that I don't see the flush low like I just explained. Keep in mind, we don't have to see a flush low. Just look at the 415 candle, this one that I showed you, and you'll notice there was no flush low there. Even if we bounce though, bulls will need to get above the bearish channel. Same thing I talked about on the ES futures. Those levels are 18,791 and 19,020. You'll notice on both charts that I gave you, I've already marked these and you should know what they are and what it means. Okay. All right, so even if we bounce, bulls will need to get above those. The levels are, and I just went over. From a fib perspective, though, the next level we could see is the imposter at 18,050, especially if price cannot sustain above that 618. When I say imposter, what I mean, okay, if we come over here, is that we could see the 76.4 and possibly the 88.7. Now, as a reminder, the imposter level typically is a great level to shake people out. And then we get a significant bounce back up to the upside, but then that will basically hit our resistance and then come back down and hit the 88.7. Again, guys, you got to get over the bearish channel for this week to be really bullish. It's just hard for me to think we could do that without catalyst. And again, when I see a lack of catalyst on the economic data that I gave you earlier, usually that means we'll probably get some sort of form of information through social media out of left field that you're not expecting. Just be on your toes. Trade with what you're willing to lose, especially in events like this. I personally like smaller allocation, wider stops. That just really, really helps me out. The next thing that I want to talk about is the VIX. So let's come over here and then we'll cut this video out. So on the VIX itself, we came up and hit the trendy edges. Believe it or not, you can use the same methodology using supply and demand, using the trendy edges to understand where price is going to go in the VIX. So like right here, we go inside and up. That's a bullish formation. We hit this level, boom, that should have been your target, and then we reject here. Above here for this week is again major caution and it hit here just to show you it rejected, but I drew some fibs and understand if we close under here, expect the market to kind of melt up, but there's one more area right in here back at the inside and out formation around 16. You could see volatility. So let's say, you know, the market starts to go up for 1 or 2 days, people start feeling better. Right here, if we get even close to here, it doesn't have to be perfect, doesn't have to be 1621, could be close to 17. You could see another spike just like that. That sums up this week. I hope you really appreciate this. Take the time to give me a like, and I can't wait to trade with you guys come tomorrow morning. Have an amazing day.